So welcome on the show, Frappe with Forecast and Multiply. Today we have Mehul Muchhala, founder of Spectra Quant Private Limited. So when it comes to stock market, it's all about Mehul Bhai on the show, and obviously when we look at his analysis, his recommendation, his thought process, everybody wants to know what exactly Mehul Bhai does it.
Thank you. So what we do is, so I've been in the market since 1994. Okay, so we've seen a lot of cycles, whether it's bull market, bear market, consolidation. So we've gone through a lot of cycles. And along these cycles, there is a visible pattern if we sit down and analyze the patterns. So when it comes to analyzing patterns, we do it with two things. One is we quantify the data, we segregate the data on different time intervals, and then we run time cycles. So when we do time cycles, it gives us a brief understanding of where we are at the current level. So just to take you back, in 1979, Sensex was at 179. Today we are at 79,000. Okay, yeah. So that is the exponential growth we've seen. So when you sit back and understand this cycle, from 1979, we've seen the rally to 1992. Just before Dr. Manmohan Singh announced the rupee convertibility. And that's when we saw 13 years of rise.
Yep,
from 1992, there was a Harshad Mehta scam, or whatever you call it. Till 2005, markets were in the consolidation zone. And there we've seen Asian currency crisis, KP.com bust. So good 13 years of consolidation from 1992 to 2005. Again, that is 13 years. So there was a 13 year of rise, 13 years of consolidation, and 2005 was the inflection point. Right, 2003 when the interest rate started, bottoming out. And from there itself, from 2005 right up to 2018, markets have again for 13 years, it's grown exponentially well. In 2018, market did not top out, but the prices dropped. So again, it went into a consolidation phase. So this is what we try and analyze at a broader level. Having said that, one has to be cognizant of the fact that which stocks or which businesses you are investing in. That is the ultimate crucial thing, and that we try and finalize or maybe identify through fundamentals. We run queries on the fundamental parameters and the quantitative data models.
So it's all about analyzing the trend, which stocks will do well from here on, basis there maybe an order book, the trend is going on, which level one should short, one should buy. Is it like that as well, what you recommend?
I would say rather than analyzing the trend, I would say use the word analyzing the data. Okay. Once you have the data in place, you can play around with the data, check what has happened in the history. Based on that, it's easier for us to arrive at a potential targets, for the decade, for the year, for the quarter. So this we run it on different time intervals. So monthly, quarterly, yearly.
Is it cyclical kind of stocks you recommend, or is it just that a specific concept which you keep on running throughout the year, or it keeps on changing? So generally what happens, let's say I come from a mutual fund background.
Absolutely.
So we have a fund manager is looking at something towards top 100 or Nifty 50, or his benchmark is let me look towards large cap, mid cap, or a small cap kind of fund. So his focus is clear. This is the kind of stock which I'm going to look at it, and then absolutely basis that he buys and sells the stock.
Right.
So is it similar kind of pattern what you do in your portfolio?
So what we do is we understand the risk return profile of the client. Okay. And what is his objective.
So this appetite you mean to say?
So the risk return profile means the risk appetite, his objective, and the portfolio construction revolves around that thought process.
Okay.
So it has to be in alignment with his risk return profile and his objective. So if his objective is safety, I cannot have a small cap or micro cap stocks in the portfolio.
Possibly.
Because see, what happens is there is a core portfolio and a satellite portfolio.
Okay.
So assuming you are building a house in Japan or in Kobe where there are a lot of earthquakes, so you would want a house which has strong roots, strong gripping, and it should not be shaken during the earthquake. So that's where the core portfolio is.
Wow.
For the flavors that you want to add in the satellite portfolio is the kind of interiors that you do in the house. What flavors you're adding. But the whole crux is the root of the fundamental, or the base, or what you call, that should not be shaken under or compromised under any circumstances.
So just to add over there, what we do also at Focus and Multiply, it's the same thing. We try to understand the risk profile of the client, the kind of risk he's looking at, the kind of time horizon he has, what is the kind of goal he has. Some people are looking at retirement income, some people are looking about a fixed income coming to their account post age of 60, so I don't have to go back or I'm compelled to work. Something which I'm more passionate to do in my life. So let's say I want to play cricket after age of 45 and I don't need to go to work. So is there some investments, maybe in stocks or a mutual fund or a property, which ensures that fixed amount of money coming to my account and taking care of my lifestyle needs?
Absolutely.
So we as relationship managers, we as mutual fund recommenders, we generate a portfolio, we generate a report where we understand in detail time horizon, goal, risk appetite, and then basis that we recommend a mutual fund. So buying a mutual fund is very easy, but which one meets my goals is something which a question mark is there. So that's where we come into picture. On the other hand, we also cater to loans. So nowadays, what a common thing what I've experienced is that everybody wants to be into stock market. The way, the rally what we have seen, I'm sure even you will be getting calls. Ye stock mein dal do, and if you're messing, people will say, kitna dalu? Even when I go for a small kind of break in morning garden walk also, elderly people 70-75 talking about which stock to invest. That was not a trend earlier. Last 2 to 3 years, the kind of rally what we have seen, everybody wants to invest. So where I say is that I've seen customers who are saying me that can I get a loan at a lower rate, 8-9%, and I have an option to invest in stocks. So what's your view on that? Is it advisable to borrow and invest? Do we offer that kind of stocks solutions also?
See, borrowing and getting a leverage and investing in the market and creating that incremental alpha is a very skilled job. Only matured investors should do it. I would recommend. So when I thought and when I was meeting you, I was trying to understand what you exactly do. Forecast and multiply. Is it something that what we do is based on the data, we try and forecast the thing and you multiply the wealth? Is this what you do?
Yes, absolutely. The same way, we also try to understand the trend of the stock market, where it is, as I said, the profile of the client, options which are available, and basis that we offer. Generally, we recommend time-based solutions. So if somebody is having a 10-year, 15-year plus options to look at, then only we go for this kind of options, small cap or mid cap. Or generally, it's a large cap kind of thing which comes into recommendation. There are people who have said, I want my child to go for a better education overseas. I cannot tell him to buy a small cap fund that this will result into that kind of return. See, at the end, everybody knows that it's a stock market. It can rally. It can have a consolidation phase, as you said, for 13 years. It can correct as well. So it's all about planning your wealth well, whether you are investing or borrowing. What we are also known for is that in your own bank, if you're looking for buying a property, for example, I can offer you a better rate what a banker gives. I can offer you an eligibility confirmation in 2 hours. So looking at your papers, my manager there itself says you, basis your papers what you have shown me, I can assure you that this kind of amount will get approved post submission of papers. When you submit papers in 48 hours, I am giving you a sanction letter, which generally in today's scenario even a banker are not able to do it. So we have a tie-up with maximum banks in the country and NBFCs. So whether it's a good CIBIL track record or a high or low ITRs basis that we recommend which one to go for. Entire journey is done by my team. We have a dedicated relationship manager who gets in touch with you regularly before and after the sale is done. And he also keeps you updated on the rates which are happening in the market. There are cases like, for example, X bank is offering a rate of 8.5, 8.6 and someone else is offering you at 8.2. So we try to understand that match, help you to understand that gap, that this is the gap which is offered by another bank. By saving the 30-40 paisa in a span of 15-20 years, which generally people take time to pay off that loan, can turn into lakhs of rupees. So as I said, it's all about multiplication of wealth, and that is what we do.
Absolutely. So again, coming back to your question is, should one leverage? Only if you are very well confident, then you should go for it. Otherwise, one should refrain from, doing that.
In fact, I've come across many people where they take loan against property, business people I would say. And I have many cases from LP itself where they say that I want a product where the sanction is there in my account, the limit is set. The day I get a call from my broker or for the influencer, whoever is recommending to buy a stock or invest into business, the money should move in few minutes from my account. Is it possible? And I say yes. We offer that as well. So at minimal cost, 24 by 7 a dedicated relationship manager, best rate. So that is what we are known for.
Okay. Wow.
So Mehul, one question from my side, 2025 and way forward, how one should look at investing into stocks, direct stocks I'm talking about.
So people should look at, I feel, large cap stocks. And if one is interested in mid cap and small cap, they should have a view of at least 5 years. But one has to be very cognizant of the fact that what sort of weightages, people are, putting in their portfolio.
Okay.
And they should, I personally feel is, today you go to a general physician, he may not do your surgery. He will refer you a heart surgeon. So people should go to a specialized people to manage their portfolio because they understand, how the portfolio is built, the constructed, and each stock with what weightages one has to have. That if the retail investor is able to do it, it's fine. Otherwise, go to a specialist. There's no shame in it. Go to them, refer to them, and create a portfolio with a long-term journey of at least 5-10 years. This is the place I think is going to grow exponentially. One last thought is, the risk-free rate of India, the G-Sex, is 7.5%. Nifty has given about 13%, and if I say total return index, it's about 14%. That's 2 times. So if you are able to do 3 times of that, 21% and 18-19% CAGR, you should be very, very, very satisfied. Don't look for astronomical return from here on.
Absolutely. In fact, what I also feel is that I've come across clients who talk about, I am doing my own investments, I am selecting stocks,
Right.
I'm looking from here or there. I always say, do you have that kind of time to track your portfolio?
Absolutely.
Do you have enough knowledge to gather information? If you're able to do it, maybe after a year or 2 years, you will become some kind of expert.
Right.
Till that time, as mentioned by you, you should go to a specialist who is well known for it.
Absolutely.
Who has a proven track record. Anyway, it's always good to hear from person like you.
Pleasure being on the show.
And I thank you so much for coming on our shows, giving your valuable time. It was good to know you as a person.
Pleasure, and thank you for having me.